Good day, all inderesTV viewers and listeners. Nordea published its third quarter results today, and I'm interviewing CFO Ian Smith. Ian, congratulations for, I think, record results today. What were the highlights of the third quarter?
Hi, Henry. Good to see you. So yes, we are pleased with the results today. We saw strong income growth, good cost control, and still quite low loan losses. And that meant that we had a return on equity for the quarter of 17.9%. And I think it's a good quarter for Nordea.
Few follow-up questions. Is this the peak performance of Nordea? Where can you improve anymore?
I think we're constantly looking for improvement. It never gets any easier. And I think that quite often the question is asked, is this peak net interest income? I don't think so. I think we will see strong net interest income again next year. But of course, there are a number of different components that then contribute to the results. And let's see what happens in relation to things like loan losses and other things. But I still expect Nordea to perform very strongly next year.
I think your loan losses were 4 basis points, which is, I think it's not sustainable level in the long run. Or how do you think? Is this a new economy where you don't have any credit losses?
It would be nice to think that banks could go through life with zero to very low credit losses. And of course, they have been extremely low for the last 3 years. I think that our normal expectation for loan losses is around 10 basis points. And that is still pretty low by comparison to other European banks. So I think as we start to see the impact of the macroeconomic policy and inflation come through, I think there's always a bit of a lag seeing that come through to the real economy in terms of impact on our customers and things. I think we can expect to see a bit of an uptick in problem situations and therefore higher loan losses than we've seen in the past. But Nordea is a very well managed bank with a strong credit portfolio, so I'm not expecting to see any extremes at all.
So you would talk more about normalization of credit losses towards 10 basis points, or?
I think that's our expectation. Now, if your theory comes to pass that we have a new level in this economy, let's see how that goes. But our general expectation is we gradually move towards those normalized losses of around 10 basis points.
If I recall correctly, in your presentation slides, you talked that net interest income will improve by, was it 200 to 300 million next year? You have some hedges and so on, funding costs, on the other hand, they go up a bit. So could you clarify the dynamic in the interest rate? How you see the ECB policy rate going? How are your hedges working?
Yeah, so one of the key drivers of increased net interest income is the policy rate. And I think with each quarter we see that market expectations and indeed the central bank signalling is that we will have higher rates for longer. And that's a reality that I think we'll all have to get used to, positive rates, and I think they're here to stay. So what we show in our slides is the impact related solely to those rates. And then, of course, there are other things that play into what actually influences the NII in the end. And those are things like wholesale funding costs, which we know are going up, lending margins where we are seeing some pressure, particularly on the mortgage side. I have to say that corporate margins are holding up pretty well, and our deposit hedging impact, which for 2023 has been something of a headwind in relation to net interest income, but it's an important risk management tool. And as we go forward, we expect that to be that headwind to dissipate. So a bunch of different things that determine what our net interest income will be. I think the key message we wanted to get across today is that we still feel pretty good about net interest income going into 2024. And indeed, if you annualize the Q3 net interest income, that would give you a higher outcome than we saw in 2023.
Do we see then the peak net interest income next year? How far do you want to forecast?
I'm going to resist calling the peak and leave it that we expect net interest income to be higher next year.
Okay. About Nordic economies, I think Nordea has a very nice window to different Nordic economies. So what's your macro take on Nordic economies right now?
So I think that the Nordic economies are in good shape. You know, they're structurally sound. They have the right balance between export and internal productivity, and a really strong fiscal position. I think the outlook for growth is quite muted, and I think that's maybe the key message, is that certainly we would expect in the next 12 to 18 months to see quite low growth in domestic consumption and therefore levels of credit. But we have such a solid base. I often say to people, I'd rather be here than anywhere else in Europe.
I know Nordea has quite limited exposure to commercial real estate, but I think that's one of the worries investors have regarding also Nordic banks. So what's your take on that sector right now?
So I think commercial real estate often suffers in an economic slowdown, and particularly with higher interest rates. As I'm sure you know, Nordea's exposure to commercial real estate is relatively low. It's only around 7 to 8% of our total lending, and we're happy to have it that way and to be diversified across the 4 Nordic countries. So I think commercial real estate sector will have some challenges, particularly in the higher interest rate environment. But I don't have concerns about our own exposure in that regard. I think it's very well managed.
Lastly, you agreed to buy Danske Bank's Norwegian personal banking. What's your comments on that?
So we're really pleased to have had that opportunity. It's a great way to bring in almost 300,000 new customers to Nordea in Norway. It's expected to increase our mortgage market share from around 11% to around 16%. And so it's a brilliant opportunity to grow our business in Norway. And Norway has been our smallest presence in the Nordics, so we're particularly pleased about that. There's still a lot of work to do. We won't close the transaction until we get regulatory approvals, and then we do all of the preparations to bring the customers across in a good way. And that's going to take us until the end of 2024. But we're excited about the opportunity to welcome those customers. It'll be a good strategic step for us. And I think we've got to a good answer with Danske in terms of pricing the deal, so we only pay for what we get. And I think that's a pretty good outcome. So overall, very pleased, but recognizing that there is a lot of work to do for both Danske and ourselves to be ready to make the transfer, and we'll do that towards the end of 2024.
Sounds good. Thanks, Ian, for the interview. I'm looking forward to the next one.
Pleasure, and great to see you, Valerie.